All right, I think we're recording. We're good. Excellent. All right. Hi, everybody. Welcome back to another, I don't even know what we call these things, but they're just Tory videos that we get on with our vendor partners. This one happens to be Rob Benson from Movement Mortgage. Rob, thanks for joining me for a little.
Oh, it's a pleasure. It's a pleasure, Mike. Thanks for inviting me.
Oh, sure. Absolutely. You know, we've known each other for quite a while, and you know, the little anecdote of like, if you can spend 15 hours in a car with somebody without wanting to murder them, then they're probably going to be a good business partner. So that was our I guess initial meeting. Was driving up from Charleston.
Charleston to Boston, right?
Yeah, escaping a hurricane out of the city. So, yeah. Well, anyway, it's good to have you here, and I figured we could just talk about kind of what's going on in the mortgage industry right now. So, obviously, a hot market, low interest rates, limited inventory. There's been a lot of refinancing. So, if you can kind of just tell me what has been going on with you in terms of trends you're seeing, what's going on in the mortgage world, that would be a good way to start this off.
Yeah, I mean, you know, it's obviously been a very interesting year, you know, and I mean, even going back to last year.
Yep.
But currently, you know, the most interesting thing is rates have dropped again. You know, so you know, when we were talking in November and December, and you have rates that are starting with a 2, you know, 2.6, 2.7. I mean, that is so, it's just historic, right? And then rates started ticking up again. So the beginning of the year, we had rates, you know, starting to creep into the 3s, and then they were, you know, for a couple of days there, they were at 3.5. So and now today, over the last week, we're starting to see rates back down to start with a 2. So, you know, I just locked someone in today at 2.875. So the rate is obviously an important factor in this frenzy, right? I mean, people are seeing an opportunity to borrow money at a cheap rate. It's a good financial investment. But again, like you had mentioned, limited inventory. So on the mortgage side, there's plenty of money to lend. The rates are low. And again, if we look at the history of this and what people are saying is going to happen, we're expecting rates to go up this year. I don't see them going up, you know, a lot. We could see them, you know, in the mid 3s. We could see them in the low 3s. But I always say to my clients, you know, rate doesn't matter. And I only say that is because I'm in the purchase market, and I've done mortgages where the rates are at, you know, 8.3. You know, yeah. And the exactly, like most people,
they seem like scary times. They seem like tales of yore, you know, from way back in the day.
But it's true, because whatever the current rates, you know, everybody wants a low rate, obviously. I mean, that's normal. But what I meant by that is that no matter where the rates are, people are going to buy homes.
Yeah.
So it's all relative in that respect, where you're going to see, you know, in you and I, we may want rates to go up a little bit. And the reason why we do, you and I, is because that will potentially slow down and create more inventory.
Yeah.
You know.
Yep. And so what, I guess, besides rates, like what has been the effect on like types of products? What are you seeing for like down payments, and has the like this particular time made it more innovative in terms of what you're able to like offer clients, maybe like a different, instead of your standard 20% down loans?
Yeah. So with COVID, you know, again, last year, January, February, March, when we started to see all this start to happen, one of the first things we saw that went away or was limited was jumbos. So anything over a 724,500 loan amount is a jumbo.
Yep.
And you saw that starting to, they started creating more reserves potentially. They stuck to 20% down minimum on
Yep.
jumbos. That was the first thing we saw. And then on the servicing side, there was a little bit of panic, but that they weathered the storm on that. And now you're starting to see jumbos come back strong, meaning more investors are willing to create funds for these jumbos to be
Yep.
placed. That means lenders are more and more apt to say, hey, we got this product now because we have multiple investors that are going to buy the loan off of us.
Mm-hmm.
So that's pretty exciting. And then we will start to see more lower down payment jumbos come into place as well.
Okay, so it's not a standard 20% anymore at the moment. You could kind of
it's 20%, but I believe we're going to have some products out in the next 30 days that are going to be less than 20%.
Gotcha. Oh, cool.
Probably 10% down. Probably 10% down jumbo.
And you kind of need it because the prices are now like you're kind of automatically in a jumbo if you're going to be looking like at single families out in a desirable burb area. There's going to be a lot of loans that are that amount.
Yeah, like our market, especially your market, my market. I mean, we're in that space, and so I think that. Other than that, I mean, loans are pretty much the same. There's nothing crazy out there. In the broker world, you're starting to see a lot more boutique products. Kind of
describe those for me. What does that mean?
No income stuff, stated income.
Okay.
Let me see that. Asset-based loans. They're just starting to think outside the box and realize that there's another criteria of loans that are available out there for people that people are asking for.
Gotcha.
Foreign nationals, I have, I know we're talking our market, but back in, down in Miami, right now there's a huge market for foreign nationals buying properties.
Mm-hmm.
And they're just not buying properties for 500,000.
No.
These are big numbers, and there's a huge outlet for that. So we're looking into and making sure we have a foreign national product that allows people. I mean, the down payments are significant, but it's a good loan. But yeah, getting back on topic, I think this is a really good time. It's a good time to buy a house. It's great for rates, and we will start seeing inventory start to come back. You and I.
Yeah, I'm in the same camp. I think that week by week, month by month, moving forward, we're going to see a lot more come on, and it won't be this squeeze and this like free for all frenzy that we're seeing. At least take the edge off a little bit from there. So, and we're kind of on this COVID topic, different from last year this time, because I mean, I was out there's pictures of me with gloves, no mask. Each week we're trying to figure out like what the rules are and what's going on. So the people that were really hungry are the ones who ended up getting the homes, but they had way less competition. So they were willing to sacrifice, I suppose, some sort of health and safety protocol a little bit to get a house, but it was worth it for them. So what in this past year, I imagine, and you're talking about rates too, the refinance boom that happened where if you didn't get one of these low rates years ago, you had the opportunity to. So what did you see like over the past year in terms of refinancing and all that?
Probably a 40% increase.
Wow.
In loan volume due to the refinance. Yeah. So when you're a purchase guy, right, or a purchase guy like me, refinances just come naturally from referrals. But yeah, the refinances were strong. It represented, for me personally, 40% increase in business because of the refinances. And those are all past clients that, we're happy that are calling up saying, hey, can I get a better rate? And we're looking at not only lowering the rate, but potentially lowering the term cash out, for home improvements. People did a lot of home improvements this year.
Yeah.
They put in pools, they put in additions
Yeah.
because they realized the house was important.
Mhm.
So we saw a lot of that. And the most what we're predicting is that refinances are going to stay strong through 21, because there's another influx of people coming in that are going to need that help. Not necessarily, I need money for home improvement. There's data out there that suggests that people are going to need money because they've spent money and they need to relieve some pressure. So that's whether that comes or not, we don't know, but that's what a lot of the experts are predicting.
What did it end up? I mean, these were historic lows. So wouldn't essentially everybody be up for a eligible for like a refinance? That would make sense. Like,
I had a lot of conversations with people and actually advised them not to refinance.
Okay, and why is that?
Because it's not just about the rate, and that's what you need to do. Like it really depends on each person's situation, right? But if you have somebody that had a rate of 3.125, okay, and all of a sudden they call up, they're like, we heard the rates at 2.75. Okay, yeah, they are. Let's take a look at it. Let's do an analysis. One, are you saving money? Oh, great. Yeah, okay, we're saving money. Two, what's the cost to do it? Right? And then you got to look at the return on investment. And a lot of times when we did that exercise, I was like, guys, what are we doing here? Don't refinance, please. Just, you don't need to. So, and people are appreciative of that. They're like, oh, thanks for being honest. I'm like, why wouldn't I be honest?
Yeah.
But you wouldn't believe what goes on out there. But, so I guess that would probably be the main reason why people want to refinance, is obviously save money, in any way, shape, or form. But most of the people this year that I refinanced was due to rate.
Sure.
Yeah.
Sure. Yeah, especially if you're in the fours, then it makes sense. But if it's,
oh my gosh,
yeah.
I'll never forget this. It was one client that we saved them $1,600 a month.
Wow.
That's just on the payment.
Yeah.
$1,600. I was like, again, big loan amount, right? Big loan amount, but they were at 5.875.
Wow.
And they got all the way down to 2.625. Big loan amount.
Yeah. Yep. Then it's a slam dunk. That's a no-brainer.
But they had no idea, And I said, and I asked them the question, like, why didn't you refinance sooner? Like, we could have refinanced you like last year and saved you $1,000, and then refinance you this year and save you another $600. But they said, I don't know, we just never thought about it.
Yeah, exactly. You just kind of you put it on automatic pay, away you go. If you don't think about it, you don't think about it.
Yeah, it's all good.
Yeah. So in terms of like the competition in the market, so I mean, you're the first company that I knew of that would do. If you remember this, like years ago, like when we had an offer accepted where we were able to waive the mortgage contingency because of the upfront underwriting, and the woman on the other end was just like, I still don't really understand what's happening here. And then when it clicked, it was like this kind of come to Jesus moment for her, and told the office and everything like that. So if you want to explain what like upfront underwriting, or whatever you want to call it, pre-commitment, what that entails, what the benefits are to that, how much time and energy it costs you guys, but then how good it is for the clients.
That's again, in this market we're in, you have to be competitive, right? So the buyers have to be strong. And one of the things that we offer is they call it upfront underwriting. So basically what it is so on a normal pre-qualification or pre-approval, the borrower is going to apply for a loan. We're going to pull credit. We're going to do all that stuff. We're going to analyze everything. And then we're going to ask them for their documents. And if you're a loan officer like me, who's been doing it a while, you're going to know that this is all set. Okay. And I'm talking running it through automated underwriting, reviewing bank statements, reviewing income tax returns. That's all normal process. So that will dictate an opportunity for me to send a pre-approval letter.
Mhm.
Okay. And I consider pre-approval letters and pre-qualification letters exactly the same, because you have a loan officer like me that is stating that they've reviewed everything and that they've run it through automated, they've gotten an approval, and we're good. So that's how a pre-qualification and pre-approval are sent out. There's another step beyond that, which is, again, different banks, different lenders call it different things, but upfront underwriting means that after I do all that work, then I submit it into underwriting with a to be determined address. So there's no address attached to the file.
Mhm.
Now, some lenders do it, some don't. Um, and the only advantageous part to that is that you had a real underwriter reviewed the income, assets, credit, and everything, and kind of confirmed your pre-approval.
Yeah.
It's the
Yeah.
same pre-approval. So if you read the pre-approval letter, it states, this is a pre-approval letter. It's not a commitment for a loan or anything like that.
Mhm.
But why is that important? Getting back to the competitive market is, if you, right, so you're the listing agent and you see this letter that states, this loan was actually underwritten and it's pre-approved. That's a lot stronger than just a regular pre-approval letter that you'll get.
Yeah.
So
In their eyes.
in their eyes,
Yeah.
I don't see a difference, because if I pre-approve a loan or an underwriter approves a loan, 99.9% of the time we're coming up with the same opinion that
Yeah.
we're good.
Yeah.
In other words, I don't think I'm going to miss anything
Mhm.
that an underwriter will catch. But again, so getting back to being competitive, you're going in as a buyer with what, I've seen 30 offers. You've probably seen more than that.
Yeah. It's crazy.
Right. So how do you separate yourself from that? So one of the things is, obviously, let's have a real pre-approval letter that's approved. That's one thing. The other thing that I've found, which is really helpful, is me, the lender, calling up the listing agent
Yep.
and just saying, hey, how you doing? I'm Robert. One of my borrowers put an offer in. I just want to let you know how strong they are, and I'll tell you that we're very confident we can get this loan done. We'll have you a commitment in 10 days. We can close it in 21
Mhm.
if the seller wants to move that fast.
So it does help with speed?
If you tell them that,
Yeah.
it's important, because if there is a contingency in the contract, a mortgage financing date, they're going to want to know, hey, how quick can you get this to us? And if it's quick, if it's 7 to 10, I mean, we just need the appraisal. So if it's 10 to 14 days, that's a good time
Yep.
to have a full-blown commitment, clear to close. So I would say that is important. Calling the listing agent, having a strong pre-approval letter. And again, I don't know if you've done this, but tell them to write a letter
Yeah.
to the seller.
Yeah.
I've seen that a few times, and that's helpful.
I think the emotional pull that has, they're like a lot of clients will be like, well, how much is this? Is it worthwhile to do? Whatever. I was like, well, it's not worth $15,000, but if you are basically on par with somebody else and you have like a better kind of story and they feel like they know you a little bit, it definitely certainly will help in that situation.
Tell me about, I want to ask you a question. So how are you handling the overbidding on homes?
Sure.
Like I'll tell you how I handle it, but I want to know how you handle it.
In terms of, there's really,
I'm sorry, I'll rephrase. So if there's let's say there's a home for sale for 700,
yeah,
and are you saying, hey, are you coming up with a number like, well, 750, I think we'll get it.
yeah,
Yeah.
yeah. I mean, when there's not 30 offers, yeah, you can kind of do that. You kind of have a ballpark understanding. But right now, the prizes, I mean, when there's 30 offers and stuff's going for 10, 15, 20% over the ask price,
Wow.
I'm thinking, well, why don't you just price it at $1 and like make it an auction essentially? Because that's kind of how it has that feel to it. So there's an element of guessing in it. There also, part of that is the historical data of what appraisers are going to see. And I'm trying to tell people, you might look at comps right now, but the comps that actually are closest haven't even closed yet, because stuff's moving so rapidly that we might only have like the data that pertains to this particular property. There's probably only 3 weeks of trailing data that would support that, but it's not even closed yet. So you try to get, you know, you can go as far as calling agents that have stuff under agreement to see where it might have gone if it's not closed yet. There's comps in the area, but you know what, if you don't have to waive everything, putting a limit or a cap on a difference of appraisal price to say that you'll pay up to 25, 30 grand over the whatever the appraised value is, will help out too. So at least it shows that you're not going to like bail on the deal, that there's enough. And I think that you calling the agent helps support that, when you're just like, yep, they have plenty of in reserves. It's okay if it doesn't appraise. We'll figure out a solution.
Yeah, because that's the conversation that I have to have with the
Yeah.
borrowers, right? So if the borrowers are putting 20% down or more, I'm not super concerned about the appraised value,
Mhm.
because if the appraised value comes in low, we have room to move around.
Yep.
If they're just putting minimum down payment, like 3 or 5% down, then I get concerned, because if the appraisal comes in low, they still have to come up with their whatever 3% down, but they also have to come up with a difference
Mhm.
between the appraised value and the original purchase price.
Yep.
So I always have to make sure they have those reserves, if they're okay with that. And again, I had a conversation with a listing agent about this exact thing, and they were saying, hey, if it comes in low, are they good? You know, so and it was interesting what you said about the appraisal amount. There's like, you're having language in the contract that says if the appraisal comes in X, we'll pay this much over.
Yeah, to at least cap it, right? So if it's not, I mean, I think we do a good enough comparative, you know, analysis of similar properties, and we have an understanding of like roughly what the value should be. But sometimes, the data just isn't there to support it. It might be a very popular home, which is also helpful to the appraiser too. When they see like there's 30 offers on this property, it kind of shows the amount of interest that's in there. But yeah, just to kind of keep people safe at first. Eventually, if you keep losing out, that goes away too.
Yeah. So, right. So if you have a buyer, right, that keeps, you know, they're losing offers,
Mhm.
then are they, and again, I've seen this, so you've probably seen it as well, that they're starting to not worry about contingencies.
Yeah.
Buying the property as is, no inspection, no mortgage financing contingency, no appraisal, you know, and honestly, that's super dangerous.
Yeah. Yeah.
I mean, if you got a great borrower and you're not worried about it, okay. But there's a lot of risk in not having any contingencies
Yeah.
in a purchase contract. And honestly, I don't think, you know, even though people are, you know, the sellers feel like they can, I don't want to say bully, because it's a bad word,
Yeah.
but they are feeling like they're in control of the transaction.
I mean, in a sense, right now they kind of are. So like,
I know they are, and it's fine. It's perfectly fine. I don't have a problem with it.
yeah, we're getting stuffed in lockers. We're getting swirlies in the toilet, in the in the bathroom stall. We're getting beat up out there. But the when we do have to waive those, we try to give them at least peace of mind. So for example, the appraisal, okay, you're going to pay extra is 20 grand or whatever. For the inspection, our inspection company will either do a pre-inspection if you really want to go all out for this house, and so you're at least getting one done beforehand, or in lieu of that, I tell the clients to take videos and pictures, and I do the same, or our agents do the same. And then over the phone, luckily, we're able to get in touch with the inspector, so that at least like, hey, there's no real giant red flags that I can see. Granted, they're not physically at the property, so there's more risk that you take on, but at least it's some sort of stopgap from completely waiving it, and not be, but it's kind of, unfortunately, what you have to do right now. Yeah.
That's interesting you said that. Like, you're telling me you have, and I've known you a while, and I didn't know this. You have a home inspector that's like on call, like they'll get out there quick.
We use the same company for every inspection.
Yeah,
a pretty good amount of inspectors, and so if we can do it in a day or two notice, they're available.
Wow.
And once again, if not, then if you at least just want to talk over something with an expert, then we'll allow them, or kind of set that up for them.
That's really cool. I didn't know you guys had that kind of clout.
Yeah. It's Tori, baby. Come on. Let's go.
I'm telling you, this is, like an inspection's really important.
Yep.
It's really important because a lot of buyers, right? Because when we talk to buyers, we kind of tell them what to expect from now until the time they buy the house. But a lot of buyers don't understand the difference between an inspection and an appraisal.
Yeah, right.
Or they think it's the same.
Yeah.
So yeah, I mean, this is pretty, I don't know if it's bold to say, but the lenders don't care about the inspection.
Yeah, right.
We don't even want to see it.
Yep.
If it's a VA loan, yeah, we'll need a pest inspection and stuff like that. But on a normal loan, we don't want to see the inspection.
Yeah.
So we're relying on the appraisal to, take pictures, make comments on the condition, and obviously determine the value. Yeah. And that's what we go by. But I can tell you that, in our market, right, I haven't seen too many appraisals come in low.
Which has been great. And that's the most comforting part, that the appraisers know the trends and everything like that, and that there really hasn't been, even if you are taking on this risk, it really never actually gets actualized or realized.
But I told you, I don't know if you remember this, right? We were talking about the CFPB, right? So I have this really good contact. She's actually a bank auditor, but she does audits for banks to just see if they're doing anything wrong. Yep. That's what she does. So she doesn't audit for like the government, but she's connected with the CFPB. The CFPB is kind of in control of all of banking, right? They've taken over, and they are leaning towards eliminating appraisals altogether because they want to reduce the cost to the consumer. So this is new stuff that you're going to start seeing this. You're going to start seeing them experimenting with it. Yep. and probably implementing that.
Wow.
That's because
crazy. Yeah, I mean,
think about it, Mike, though. The data is there. The data is there. What do you need? I mean, I got friends that are appraisers, so I should be careful, but the data's there.
Yeah. And in particular, I mean, it obviously works with condos where it's a big building and there's going to be similar properties there.
The same way you, right, look in MLS and you look up comps and you see if it's worth it or not, especially you do your analysis when you're selling. Why, I'm sure it's not that difficult to put together some algorithms and some programs to determine the value.
Yep.
Fannie Mae already has it. You know that. Fannie Mae has it.
It's like, it's like NASA with their technology. We'll they get it first, and then we'll see it years later.
Well, Fannie, you know why I know Fannie has it? Because sometimes on a purchase, when we run that automated underwriting, it will come back no appraisal needed, appraisal waiver. That means they got data.
Yep.
Then on refinances, if it's a strong buyer with equity, no appraisal. So the borrower just saved, $500 roughly, so that's coming down the road. The other thing that's coming down the road for buyers is, and this is really to streamline the mortgage industry even more than it's streamlined, is they're going to, your application is going to be linked up to the Federal Reserves for assets and the IRS for income momentarily. So you, not only when you pull credit, you're going to pull credit, but you're going to be also pulling in data from the IRS and the Federal Reserve.
Amazing. And
so no need for bank statements, no need for pay stubs, no need for tax returns, no need for W-2s. It's all right there. It gets populated in, done. And people are like, well, yeah, this makes a lot of sense. Why are we torturing people for an updated bank statement showing the deposit check clearing the account? We do that on every borrower, right? We don't need to do that. The Federal Reserve has I don't know if you know it or not, but they know the dollar down to the cent in your account right now.
Mm-hmm.
It's in their database. They know it.
Yeah.
So
yeah, exactly. Yeah.
That's some cool stuff coming for me as a loan officer, doing it. It's just really cool that that's coming, because you also might say, well, doesn't that eliminate my job and figuring out how to do some? No, it doesn't, because it actually makes me more valuable to the consumer, because now, the CFPB has kind of figured out that the loan officers are the gatekeepers.
Mm-hmm.
They're the ones that, meet the clients. They're the ones that are analyzing everything. They're the ones that might discover fraud.
Yeah. Yeah.
And we're all licensed and educated and all that stuff. So, it makes a lot of sense.
Yeah. It's just paperwork, right? It's just an elimination of that, like, pretty good. So, we're getting right about a half hour. It went by rather quickly.
Nice.
Any parting words or anything like that?
I don't know. I think, I will tell you this, 2021, all right? 2021 is going to be a solid year. I think it's going to be very close to 2019 numbers. 2022, you'll be happy to hear this, Mike, because I don't even know, I think I told you this before, is going to be the largest purchase transactions ever recorded in the mortgage industry and real estate industry. So there'll be more purchase transactions in 22 than have ever happened in any other year.
Giddy up, baby. Buckle up.
So guess what? Inventory is coming soon, man. I don't know when it's coming, but it's coming.
You have to assume people put their life on hold for a year, and now that everything's comfortable, they can resume whatever they were.
Like all those people, right? All those people that normally sell a house in a year, they didn't sell.
Right.
They didn't sell because they were worried. They didn't know, there was so much uncertainty, right? And all those people are still there. Mm-hmm. And then, so think about that. It's just a wave that's starting to build up, and it'll be a good year and a half. This is going to be a good year and a half for you, Mike.
Yeah. Right back at you, Rob. I'm looking forward to it.
All right, brother.
All right, boss. Let me hit stop here. Thanks everybody for watching.